Okay, guys, welcome back. This is Kel once again. Now, today is the 1st of August 2025, Crazy Revision with Kel, review of the day chart format. So, we're going to go through the day chart. How do we use the day chart? And for all the new members here itself, right, you would like to hear this more so that you can utilize this to trade in the market. All right, so let's go into the day chart right now. Disclaimer applied as usual, yeah? Okay, so let's look at the day chart. Okay, so I'm gonna do this for you. Just take a look, yeah? Okay, so day chart, basically the main content is to do it when the color flip over from red to yellow or yellow to red. So in this case right now for gold, right, you can see gold is now doing red color candlesticks, all right? So that means that the market likely should trade lower. But yesterday we talked about this, there is a KCX right now that is blinking. All right, the one is blinking now is today, but because today's market, we will leave it alone. We look at the one previously. So what happened is that you can see right now the price of the gold has been going down lower, low each time, right? Okay. But yesterday, interestingly, the gold actually has a low, but the low actually rebounded off the previous day low. Now, this is a very good sign for buying. Okay, let me explain to you now. Okay, do it slowly to you, yeah? Okay, I need to minimize my screen a little bit. Okay, I'll take out the pivot first to make it less. Okay, I take down the KCB too so that you can see this better and clearer. Okay, so now it's easier, better for the eye. Okay, let me explain it slowly for all of you. Okay, so right, so I'm gonna squeeze the chart a little bit, yeah. Okay, so look at this. When a market is coming down, it will always be doing this, getting lower and lower and lower, right? Now, what is conditioned for a downtrend? Basically, the high gets lower, right? The low also gets lower. So this is a typical downtrend, okay? Downtrend, yeah? Now, uptrend is opposite direction, whereby usually you see the high, excuse me, the low gets higher while the high increases, and this is called the uptrend. Okay, so it's very simple to understand this. All right, so everybody look at here. So do you notice that this is the low, sorry, the high getting lower? Can you see that? Yes. The high getting lower, right? That's the first condition. And then when the market reverses itself, right, you notice that this guy will always be there, whereby the low of this chap will be higher than the low of the previous bar. So that means that as the market is coming downwards, there will be a turning point. And the turning point itself, right, is where the candlesticks has the low that is higher than the previous one. And if you look at it right now, right, you will notice that the KCX will always be at the low end where near the extremity. Got the idea now? Okay, let's try this again. So this guy has a low, sorry, has a high that's getting lower, right? Okay, the high gets lower, right? Agree? Do you notice that where's the turning point? Exactly, this guy. This guy itself, right? The thing is this: the low itself, okay, is turning up. The low is also turning up, yeah. Okay, and then after that, you notice that KCX also turned green. So because of that itself, you have this. So one thing to note is that the high must be going downwards. Okay, the high must be going downwards, and the low itself has to turn around from the low bottom up. Okay, got the idea? Okay, so you get the idea now. Let's try this again. So this is the KCX that's blinking. Look up. Okay, you can see that the high is going downwards and the low is lowering. And then after that, when the low turned around, that's where the market recovered. Okay, so you get the idea now, right? Okay, now let's push to the current situation right now. Where are we? You have the same thing. Okay, so let's watch this, guys. It's going to be very important. Okay, so now we have the chart high lowering. Okay, that's good. We have the KCX now is blinking. That's good. And now we have the low increasing. That's good. So with that, we can almost safely say that gold could be near a potential bottom. Now, very simple, you put a line at the closing price where the market is, the closing price of the when it has the extremity. Can you see that? Okay, the one that has extremity. Now, what's the price there? The price is 3275, 3275. So now, guys, today, I'll say upfront now today, today we have non-farm payroll. 3275 is a very critical number for today. If gold later do trade down to 3275 for whatever reason, once it hit the 3275 and rebound, I will definitely go in to buy. All clear? So I repeat, if gold breaks 3275 later today or even Monday, and then it rebound, right, I'll go in to buy gold. All clear? If all clear, press number 2 right now. If you hear me, number 3, sorry, press number 3 right now. All right, Jerry was very fast. Number 3, yeah? So 3275 is going to be a very, very important figure to trade for today. Okay, good idea? Okay, 3275. Okay, yeah. Now, what's incredible is that you see now as so many of you guys all tuning in, and then you're all from different countries. We have from different countries, from Malaysia, we have Singapore, we have Vietnam, all coming in, tuning in. I cannot imagine later on, right, when we get even bigger, whereby we have even more traders around the whole world coming in. Wow, that'd be so crazy. Okay, thank you very much for contributing. Okay, so now let's focus. Well, first time I see our revision class got more people than the market top. Okay, take this away. All right, not be too clustered. Okay, and then after that, next thing, where can it go? So you notice that whenever there's a market bottom, there will be a color change from red to yellow, right? So there's no red to yellow yet, okay? Then take notice here. I want you to take a look here. Now, when the market was coming down, right? This is a peak. Can you see that? A peak. Can you see? I'll try again. So when the market is coming down, there is a peak here. Can you see that? Yeah. So this is where traditionally a lot of people will put their stop loss there. That means that when they short the market, they short it here. Okay, so that's how I ended off abruptly at this point. So I'm going to continue to do this. Yeah, just give me a moment. I'll send you the part here. Okay. Because I think this is very important for you to learn this today. Putting a lot of effort here. Okay, so just now I was saying that, right? Okay, normally in a market, where the market basically is coming down, right? So usually people will short sell the market. Yeah, that's normal. And then after that, so when the market rebound, that's where people will sell even more. So when they sell here itself, right, they'll put their stop loss over here, correct? That's where usually people will put their stop loss. Agree? Okay. So because of that, right, we can use it on this against them. Okay, take a look here itself, yeah? So you see that this is where the gold price had the highest point, which is here. Okay, same thing. And then after the price of gold goes down, okay, that's where it is right here. Okay. And then that's where the market will have a low, okay, where the KCX is showing. Okay. So after that, the sound, you look at the market, it will go up, right? Now, where did it go? It will go to where it started. Okay, in this case, can you see now? Can you see now? Okay, so good idea now. Okay, so if you buy here, your target can be all the way here itself because that is where the high was. Okay, so now everybody tell me, this is where we are, which is here. Okay, this is what happened, which is here. If the market is to bottom out, where would it go? Yes, it will go to here. Okay, so what number is that? Let's take a look. It'll be somewhere about 3431 around there, 3431. So for people who believe that gold will be going up, you can buy some gold when the time comes. Right, remember the number I told you, right? The number to watch out for is 3275. Okay, so 3275 is where the level I want to be looking for as a base. And after that, if it goes up, right, it will have to go past the opening price of today, and it go past the MA30. So if the market go past MA30, then it will likely be going up to the 3431 level. So we have the KCX now at the bottom. So that's why I think that gold, if it goes up, it can go all the way to 3431. All clear? If all clear is all right, press the next button. The next button will be number 4. Press number 4 right now. Okay, good idea. So now we take the same context and then we put it into it. Now, before you go, right, remember, if you can think about this, let's say I buy some gold. Let's say I buy one contract of gold, right? One contract, okay? And I hold it all the way to here itself. Now, how much money will I make? So 3431 minus 3275. Okay, make it simple. I'll do the calculation for you, yeah? So let's take the calculator out, we take a handphone, and then we do this, and we text, okay? 3431 minus 3275 is $156 times 100. Wow, the thing is this, your potential gain can be up to $15,000 if you actually trade one full contract of gold and you hold it for $156 of profit. Well, that's a lot of money, guys. 15,000 US dollars. So think about this. If you think that you want to try it out, you can consider doing that, right? Now, it will not take like immediately a fly up. It will take a few days because you can see over here, the market at the bottom, it took about nearly 19, 20 days for it to reach that target level. So 20 days that were up and down, up and down. So but then again, the main thing is that it makes money, right? Okay. So get the idea now? Okay, let's try again on the S&P, sorry, try again on the Bitcoin, and then you understand where I'm coming from. Just one more time. Okay, so we do the same steps. Remember the rule is pretty same. We just had the market had to come down. Then after that, you had to bottom out, and then the K6 is there, and then we trade. Okay, there's some error not moving here. The data not coming in. Just wait for a while. Okay, come in ready. Go with the day chart again. Very nice. Okay, excellent. Okay, so got an idea now? Okay, so very simple. Let's try this again. So you have the K6 blinking at the bottom, which is here. The market goes down. Okay, so when the market recover, you can see that the market will recover to exactly where it started. So it's here. So where are we right now? The Bitcoin is still coming down. So wait for a while. Once the Bitcoin comes down to the low end, that's where the bottom is. And then after that, the market goes back up itself, it can be going here or even going here itself. All right. So that is how we trade using the conventional method to trade against the usual method and then make money with our crazy method. All right. Hope you enjoyed this session. Try it on your own and you will see money. That'll be all for today. Thank you very much. Apology for the intermittent drop. So let's see how it goes. Tomorrow, there will not be any market talk because I'll be traveling again. Thank you very much, guys. Take care and have a great day. Bye-bye.